Hi, this is Rahul Singh, CIO Equities at Tata Mutual Fund. India continues to be in a sweet spot relative to global markets. Stable macro parameters, especially fiscal deficit and less entrenched inflation, lower interlinkages with the global economy, revival of the investment cycle including real estate, and India's gradual emergence as a new sourcing hub are important factors which may drive above par GDP growth rate of 6 to 6.5% and profit growth rate of corporates of over 15% over next 2 to 3 years. India's soaring economic trajectory is fueled by innovation, a young population, increase in disposable income, and government initiatives across diverse sectors. Introducing individual sectoral index funds offer investors the flexibility to choose specific industries poised for potential growth and aligning with their unique risk appetite and financial goals. Starting with the base for this progress is infrastructure. Every day when you step out, you witness India's progress in the form of roads and highways. You often hear about new airports opening up and the developments in the renewable energy space. How can one take exposure to this progress? The infrastructure sector is driven by factors such as increased capital expenditure, construction sector uptick, national infrastructure pipeline, and the sustainable energy shift. All of these factors cause a synergistic effect for further infrastructure growth. Tata Nifty 500 Multi-Cap Infrastructure 50-30-20 Index Fund offers an opportunity for investors to participate in this growth story. The fund seeks to replicate, which consists of 75 infrastructure stocks selected from the Nifty 500 with a maximum market cap limit of 50, 30, 20% respectively for large, mid and small cap categories. Invest in India's visible growth opportunities through this first of its kind, well-diversified and passive fund. Next up, the fuel to the economy is financial services. Financial services forms a key pillar of India's economy. Every day when you swipe your card, pay via UPI or take that quick loan, you benefit from the sector's innovative growth journey. How can one take exposure to this progress? The Indian financial services sector consists of various industries such as banks, NBFCs, housing finance companies, insurance, mutual funds, and exchange and data platforms. The lending segment has shown robust growth, good profitability, and low default rates in the past few years. The non-lending segment has also shown growth, digital adoption, and retail proliferation. The Tata Nifty Financial Services, the index fund, seeks to replicate Nifty Financial Services Index, which offers exposure to the Indian financial services sector, which has a huge potential for growth due to low penetration, increasing disposable incomes, and technological advancements. Invest in the financial services sector and bank on the pillars of India's economy through this passive fund. As disposable incomes rise, transportation is also witnessing a fast-paced wave of upgrades. Some are moving from public transport to their first vehicle ownership, while others are upgrading their two-wheelers to four-wheelers, and the four-wheeler owners are upgrading to SUVs. In this era of upgradation, how does an investor upgrade their portfolio? Indian automotive industry should exhibit remarkable growth over the coming decade due to favorable demographics, rising disposable incomes, rapid urbanization, and availability of credit. With rising incomes, Indian families are upgrading their essential items of home, food, and personal care, and aligning with this, faster consumption of smartphones, air conditioners, and household appliances. Vehicle ownership follows these aspirations as more consumers are perceiving mobility as a comfort rather than as luxury. The Tata Nifty Auto Index Fund seeks to replicate the Nifty Auto Index. The index is designed to reflect the behavior and performance of the automobile sector, which includes manufacturers of cars and motorcycles, heavy vehicles, auto ancillaries, and tires. Invest in India's progress, invest to drive towards growth. Home ownership becomes the next aspiration for an individual, an aspiration that is achieved bit by bit. Rising disposable income is directly correlated with increase in housing demand. What if there was a way to benefit from this purchase? The sector currently has a higher demand than supply and a very strong sales velocity. This has resulted in record low inventory across the markets. the booking value in the residential real estate has seen tremendous growth. This surge is attributed to pent-up demand, a revival of the luxury and premium segments due to increased demand for bigger houses. The introduction of RERA acted as a cleanup of property and housing sector and has been successful in instilling confidence in customers. Also, the listed developers witnessed sharp growth owing to consolidation driven by RERA and limited lending in the industry. The Tata Nifty Realty Index Fund seeks to replicate the Nifty Realty Index. The index is designed to reflect the behavior and performance of the companies that are engaged into construction of residential and commercial real estate properties. Invest in real estate, invest in real opportunities. Good health is a path to achieving all aspirations. A lifeline to billions, the healthcare industry is moving increasingly from curative to preventive. With increasing awareness, individuals are undertaking preventive measures towards the betterment of their health. How can one take exposure to this shift in mindset and increase investments in the healthcare sector? Healthcare spend increases significantly as GDP per capita increases. With domestic pharma companies in good shape, revenue per bed of hospitals increasing, US market looking conducive from exports perspective, and increasing health awareness on account of various government healthcare policies making a case for diagnostics, research and other healthcare services, this space has drivers from segment penetration growth and stable earnings perspective. The government has taken many initiatives through schemes which are accessible to public, and thus the net of people availing the healthcare services has also widened. The Tata Nifty Mid-Small Healthcare Index Fund seeks to replicate the Nifty Mid-Small Healthcare Index. The Mid-Small Healthcare Index offers access to stocks unique to mid-cap and small-cap segments only. Invest in the lifeline to billions through this first-of-its-kind passive fund. Lastly, across sectors and industries, the driving force has been manufacturing. India is becoming a manufacturing hub and a preferred destination for manufacturing industries across sectors on account of lower wage along with skilled labor, favorable foreign policies, helping India to attract strong FDI, government's PLI schemes gaining market share from supply chain moving out of China's share of manufactured goods, and government's efforts towards improving on ease of doing business. India has also improved its ranking to 63rd position from 142nd in the World Bank's Ease of Doing Business rankings. Factors like GST implementation, RERA policy, bankruptcy law, digitization, and government-initiated single window clearance are supporting the ease of doing business. Looking at the breakup of India's current GDP, there is only a low teen percentage contribution to manufacturing to the same, and thus future upside to manufacturing growth is at the heart of sustained GDP growth rate of India. To tap into the potential of manufacturing theme, Tata Nifty 500 Multi-Cap Infrastructure 50-30-20 Index Fund offers an opportunity for investors to participate in this growth story. The fund seeks to replicate the Nifty 500 Multi-Cap India Manufacturing 50-30-20 Index Fund with a maximum market cap limit of 50%, 30% and 20% respectively for large, mid and small cap segments. Own a piece of India's progress. Thank you.
NFO opens on 8th April 2024. NFO closes on 22nd April 2024. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.